talking about bonds, the bonds that we can trade, or 5 of them, there are more now, the 2-year, the 5-year, the 10-year, the 30-year, and the ultra. Rather than guessing whether these are going to go higher or whether they're going to go lower, what we want to do is we want to trade the relative value relationship between the two. We talk about a rubber band. So the difference between 5-year and 10-year, how far apart could they really get? Like think of it like a 1-year note and a 2-year note, right? Let's say they're each 1% and 1.5%. Like how far apart can they really get? Can they be 1% and 12%? Probably not, right? That's kind of silly. At least never in history has that happened. So there's only a certain distance that they can get too far apart. And so professional traders don't use technical analysis and just guess on the direction. Professional traders are looking at things using relative value. It's a super simple way to analyze and trade the bond markets. We plot the P&L for one lot, not the price. I'm going to get into that. Build a complex chart in seconds. And this is most important. The markets are evolving. Traders need to evolve with the market. You cannot continue doing the same thing and think the market's going to come back to you. So what I'm going to do right now is I'm going to open up Bond Edge. And let's start going. And I'm going to put the questions up as well. I always like this because Pablo and I talk a lot about the tools and we go over them. And so I always get excited whenever I'm about to present because I know Pablo's gonna be like, oh, I wonder how he's gonna present this time. Because I think the rub with this is that some people aren't understanding what exactly these tools are. And I was telling Pablo before that whoever understands the tools and whoever sees the potential and who's ever willing to work, that's really who it's a good fit for. If you're out there and you're just looking for somebody to give you a trade and not looking to do work, honestly, this is not for you. It's just not. This is not a trade service. This takes effort. But for those out there that are looking for that and are looking to really grow into a trade, this is for you. So in front of you, ZB futures. What's the difference? Anybody notice the difference between these two? The one on the right, this is just normal Thinkorswim. The one on the left is the bond tool, Bond Edge. Simple, right? So Bond Edge, it's not an indicator. Thinkorswim stops here, right? Now, yeah, I can put all these different indicators on it or whatever. The bond tool. The bond tool does not look at the value of the ZB contract. The bond tool looks at P&L. So if we go back to the beginning of the year and buy a 1 lot, and if you held that 1 lot, you would be up 32 grand. If you were short that 1 lot, you'd be down 32 grand. Thinkorswim looks at 173.21. Now, I don't know about you, but I'm not sure how this 173.21 is really benefiting me. Pablo had the idea of what happens if we just chart everything on price. And so that's what we do. So let me take off Thinkorswim. And now let's start looking at everything based upon just price. Now, if I open this up, what's cool is if I scroll down, and if I want to look at the 10-year, now I'm just looking at the 10-year future contract against the bond contract. But again, no prices. We're looking at everything in P&L. So you see the difference between the 10-year and the bond? 4,000. What we do is we look at these different spreads. Because earlier when I showed you the yield curve, all this is is ZNZB, just the difference of these two. So ZNZB, we can follow that difference by doing that. Now look what else we can do. On the bottom, I'm going to add another study. And we're going to look at what's called the knob. And the knob is just 10-year against ZN versus ZB. It's the same thing. Down here is the knob, ZN against ZB. Up here, ZN against ZB. These two charts are identical. So you see the ZB blue, green ZN. Look at the difference. It's up 33,000. This one is up 28,000. So the spread is trading 5,000. And we want to look at the spread. Okay? But we can look at them outright like this, or we can look at them as a spread. Let me show you some practical ways to use this. If we look at ZB, ZN, and I'm going to take off this bottom one. Let's only look at the last 10 days. So what I did is I'm just looking at these things for this week. 5-year, 10-year, 30-year. How they're just moving this week relative to one another. And we have PDFs and just explanations for how to do all this stuff. So this is really cool. And this is going to get a little advanced